Welcome to the Can Innovate podcast. We focus on providing you with timeless professional development secrets and essential business life skills in a mini bite-sized format. I'm unlocking the vault and sharing best practices that management consultants have been using for decades. We're unapologetically curious. Enjoy. So hey, innovators, I've got a tasty treat today. I've got Laurence Cooke here, who is the founder and CEO of nanopay Corporation, where he's actually driving the vision to offer infrastructure to enable what is more commonly known as a central bank digital currency, which is brilliant because he's got not just founded this, he's come from a telecom industry where he was the vice president of wireless at Shaw Communications. And prior to his role as the chief operating officer at Bell Mobility, he's been doing amazing things. So he's very active in the payments community. He's the chairman of the Paytechs of Canada, member of the Payments Canada Stakeholder Advisory Committee, and so much more. We're going to learn a lot, and it's going to be a lot of fun. So, hey, welcome, Laurence.
Thank you. Good to be here.
So, out of curiosity, I always ask this question because I get fascinated by it. Before I ask what nanopay is, like, where did the name come from?
Well, it is quite a funny story. We were going to call the company Imali, which means money in Zulu. I come from South Africa, and we use a lot of Zulu words, and so we're going to call the company Imali. And we had a meeting with the Bank of Canada, the central bank, and it was with a very senior person at the Bank of Canada. And before we even started the meeting, the first thing he said was, what is this word Imali? Is it related to the country Mali? And I said, no, it's not related to the country Mali. It's Imali. It means money in Zulu. He said, that's the worst company name I've ever heard. So I left this meeting, and it was like just after we'd started the company, I left this meeting and I phoned my wife and I said, we have to come up with another name, and we've got like a few hours to do this. So we were discussing this while I was driving back from Ottawa to Toronto, and we came up with that name. She was looking at all the different options that were available, looking for the URLs and that, and that's how we came up with it. And the whole idea is that it was quick payments. So nano can obviously be nanoseconds or something very small. So it's designed to be a small amount of money and a small amount of time. And the small amount of money is related to the cost, not the amount of money that we actually move, because we actually work on both ends of the spectrum in terms of moving large value as well as small values.
Oh, I love that. Small amount of money and small amount of time. That's brilliant.
Thank you.
So I guess our audience listeners now really curious to know what exactly is nanopay.
Yeah, so at the heart, we started off with this crazy ambition to digitize fiat money, and fiat money is government-backed or central bank money, and we want to digitize that. So a paper note, like a Canadian $10 bill, represents a risk-free claim against the central bank. And that's different from money sitting in your bank account, because the money sitting in your bank account is commercial bank money. And there's risk related to that. Not a lot in Canada, but in some countries a lot. And so what we want to do is make an electronic risk-free claim against the central bank. And, if we think about the key components of an electronic digital or central bank digital currency, it's something that is peer-to-peer. It is something that is central bank money. It is something that is electronic, and it's something that is widely held. So if we think about those four different components, if you look at cash today, it's not electronic, but it is central bank money. It's widely held, and it is peer-to-peer. If we look at Bitcoin, it's widely held, or it can be widely held. It is electronic. It is peer-to-peer, but it's not central bank. And then if you look at central bank reserves, where banks put their money into the central bank, those are not widely held, but they are electronic, they are central bank, and they are peer-to-peer. So we're trying to build this unique ecosystem that doesn't really exist today, that is all four of those things.
Interesting, because we've had a lot of topics about blockchain and all those things, and it's interesting to hear a little bit about, this element about the central bank of money, because I don't think a lot of people understand that function and purpose for it. Do you think you could talk a little bit about it?
Yeah, so this is one of the curious things about all of the new payment systems that people are trying to come up with. People are obsessed with DLT and blockchain. And the irony of that is that I don't understand why you try to decentralize something that is inherently centralized. And the reason I say this is because there's only one issuer of the Canadian dollar, and that is the Bank of Canada. There's only one issuer of the US dollar, and that's the Federal Reserve. So why would you distribute the authority in something that is inherently centralized? And the answer is you shouldn't. And you shouldn't for a number of reasons. Firstly, you only have the one authority, and so it should always be kept that way. Secondly, you cannot scale something properly that's distributed because you have so many more interactions just to do something simple. So when I give you a $5 bill, that transaction is done. If I need to do that through a distributed ledger, then I need to give you a $5 bill, and I need to give that same $5 bill to everyone else in the ecosystem, and they all need to share it amongst themselves. So you can see how much friction you actually add to the ecosystem by distributing something. So, if we look at some numbers, Bitcoin does like 7 transactions per second, and Ethereum and some of the others do 20 transactions per second. And when we acquired Mint Chip from the Royal Canadian Mint in 2015, that did 30 transactions per second. So that was way better than anything there. Today, we do 60,000 transactions per second. All right. Facebook and Libra a year from now are planning to have this amazing, audacious platform that's going to do 1,000. We do 60 times that already. If we look at faster payments in the UK, where the platform cost over £1 billion to put in place, they do 2,500 transactions per second. And that costs billions and billions in infrastructure. We run our platform on an AWS server, and we can get 60,000 transactions per second. That's more than Visa, MasterCard combined globally with all of the infrastructure.
Whoa, that's huge. That's super, super fast.
Yep.
So who would be using this platform? Are these companies? Are they banks that are using it? Like, how does one utilize it?
Yeah, so we've specifically gone to market to not compete with banks. We think banks play a significant role in the ecosystem in terms of lending money. And we are not in that business. We're in the payments business, and we're in the payments infrastructure business. So we want to move money faster. We want to make it more secure. We want to make it data rich, and we want to make it traceable. We want to give like UPS like tracking. It's absurd that you can track your pizza or your Foodora or your Uber to the millimeter and know exactly where it is at any point in time. But you send a wire and you don't know where your money is for days, right? That's absurd. Almost every industry has innovated, and the one in the industry that has not is payments. And it's just bizarre how far behind we are. It's the most frustrating thing in the world. And ironically, in North America, we are so far behind everyone else in the world. Europe's ahead of us. We always say that all the innovation comes out of Silicon Valley. Well, I can tell you, Asia's more than 10 years ahead of North America in terms of payments. So, there's a lot of things out there. So who would use our technology? Firstly, it'd be used by banks. Secondly, it'd be used by central banks. Ultimately, the end users are businesses and consumers, but most of our infrastructure is unseen to them because it shouldn't matter how your money actually moves. All you want to know is that it's going to move quickly. You're going to know where it is. You're going to know what it's for, that it's secure, and that there's no money laundering.
No, this is brilliant. It's really neat because the banks and the central banks, they have really good systems in place to really help, users, and they have that kind of trust factor. And what you're just doing is enabling them to be even faster and have that, transparency.
Exactly. And then the second thing that we're trying to do is there are tens of millions of people around the world, in fact, billions of people around the world that are unbanked or underbanked. And we can help them as well because there's no economic value in banks providing them with a service, and they don't even want to be part of the ecosystem. But we can provide the equivalent of a banking capability in an app that will allow them to transact and join the formal sector, eliminating grey money, making sure the taxes are collected and paid, bringing them into the formal economy so that they can borrow, so that they can create a credit record, so they have traceability, and they become a part of the overall ecosystem, which is good for all participants.
So for our listeners out there, would you be able to explain what unbanked and underbanked means?
Yeah, so in Canada, most people have a bank account, but there are a lot of countries in the world where they don't have bank accounts. And if you look at a country like Brazil, there are 300 million people. There are 80 million people that are unbanked. They don't have bank accounts. If you look at India, you got a billion people. They added like 35 million bank accounts last year alone, and that's because there are hundreds of millions of people without bank accounts. They have ID, thanks now to Aadhaar in India, but they didn't have bank accounts. So they couldn't formally be part of the ecosystem. And all of those people are operating in cash. And cash just creates lots of opportunities for nefarious activity, tax avoidance, invoice fraud, and a plethora of other things, which are all bad for the economy in the long run. Even economies like Italy and Greece are largely driven in the cash environment.
That's amazing. And then underbanked is
they don't really have something that is serving them well. So if we look at the poorest 10% of the people in the world, or let's even greater than that, if we look at the poorest billion people in the world, they pay about 10% of their total income just for basic financial services. That's just to receive money. Or to be able to pay a bill. And, if someone told you or I that we had to pay 10% just to keep our money in a bank, we'd tell them to get stuffed. But these people have no choice. They have to take the only facilities that are available to them, and that costs them 10% of their income. It's criminal. We shouldn't be stealing from the poorest people in the world.
That's crazy. Like, that's really huge numbers. Really huge numbers. I had no idea. I mean, I knew that around the world it's like that. Is there a lot of Canadians or those in North America that are, unbanked or underbanked?
Well, there are not a lot of Canadians that are unbanked. I think there are a lot that are underbanked. And if you look at first-time mortgages and first-time facilities, more and more of those are going to the non-traditional banks, and that's because a lot of those have been underbanked. In the United States, there are thousands and thousands of people that are unbanked and underbanked. And that would include immigrants from all over the place, including in particular Mexico, where they don't have the right ID, so they can't turn up and get a bank account. They live entirely in a cash society. And that's not good. It's not good for taxes. It's not good for the ecosystem. It's not good for the individuals because everything costs them more. The other thing is that there are a lot of people that are in North America that originate from other countries, and they're sending money home. And they're sending money home to pay bills at home because not only are they supporting themselves here, they're supporting a family back there. And they pay a huge amount of money to send those funds. And often their families have to pay money to receive the funds as well. So all of the banks and the other participants in the ecosystem are double dipping. They're charging on both sides of it, and it's expensive. They pay really high fees, and they also have really bad exchange rates.
No, this is really fascinating stuff. Like, it's really alarming to hear all that, right? Because you think that's wouldn't be happening in this day and age. Like, we're 2019, right? So you think that, yes, okay, maybe 50 years ago, that makes sense. But in today's day and age, it doesn't seem to make sense.
Yeah, and payments even for businesses and rich people in Canada are not great. So if you look at sending money abroad, it's really difficult. It's complicated. It's time consuming. If you want to send a wire as a consumer, you have to turn up in the branch, and so that's a hassle. I've timed how long it takes me to do a wire, and I've done lots of wires in my life. It takes me 9 minutes to do a wire. So that is extraordinary when I can do a payment online in about 15 seconds. So it's amazing that it would take that long to do something that should be relatively simple. So that's the one thing. And then if you look at a global ecosystem level, the Department of Finance did some research into the costs of payments. So they term this the friction costs of payments in Canada. And they estimate that was around $30 billion a year. 30 billion. That 30 billion is 2% of GDP. Can you think of anything else that we could change that would add 2% to our GDP in 1 year? I mean, this is the biggest opportunity in the world. It's amazing. And, the opportunity is even bigger everywhere else in the world. So that's the first thing. The second, and this is a super alarming number, is 7 billion of that is attributed to the very simple activity of reconciling businesses' accounts with their bank, so their books with their bank account. And every single business has to do that. Most businesses get audited. Their accountants and their auditors always demand that you do this reconciliation, and that has to be perfect. And that costs, that friction, all the mistakes that are made, cost 7 billion a year. That is just, wasted money. So one of the things that we bring in our platform is we automatically reconcile your books to your bank. So imagine being able to click on your bank account and click on any transaction and actually see what that transaction was for, seeing the underlying line items that you paid for. Then you never go, oh, I don't know what that is,
No, seriously, actually, it's funny because I had to go back and look at some things, and it was about 3 months ago, and I was going online and the name of the company, I honestly did not ring a bell because it was just, a bunch of gibberish or whatever it is. I didn't actually have the full view of the transaction. I was like, why don't they just put the real name or what the purpose is or whatever it was? And it's interesting that you're saying that because it's true. And I can never remember what I had for breakfast 2 days ago. I don't think anyone can remember half the things that they see online.
Yeah, so I think there's a huge opportunity here to correct some very simple things. Firstly, all of our transactions today are dataless, and if we add data to them, it's good for consumers, it's good for businesses, it's good for accounting, it's good for taxes. It simplifies so many different things. Firstly, making them data rich in all of the payments. So all of our payments are in ISO 20022. We've done a lot in the Canadian ecosystem to make sure that we push forward on ISO 20022, and it looks like it's being adopted at every level within the ecosystem. So that's super exciting. The second thing is that payments are too expensive. So to send a wire is $25, $35, even $50 just south of the border. And I'll tell you a funny story. When we did our first round of investment, our lead investor is Goldman Sachs. We're actually acquiring mint chip from the Royal Canadian Mint at the same time. So we needed to get the money that day to not only fund our business, but also to acquire this technology. And so Goldman sent the money twice. And so we received it. We closed the deal. We acquired mint chip. I signed everything. We left the lawyer's office. I'm in an Uber on the way back to the office, and I get a call saying, we sent the money a second time just in case. And, please can you return it? And at the same time, I got an email from our lawyers saying, received the money again. And I just typed an email saying, just send it back. But when the Goldman guys called, I joked to them and I said, I thought the second tranche was for my personal account. And, what could possibly go wrong? So 10 days later, when the money was still missing, they started calling me and saying, Laurence, where are you? And I was like, I'm in Toronto. Why? I'm just checking that you're not in like an island somewhere. And I'm like, why would I be in an island somewhere? And they're like, well, there's still a lot of money missing. So can you imagine? Just because I made this silly joke about my personal account and money then disappears for 10 days, they think, oh, we've invested in this rogue that's taken our money. We're looking from both sides. So we're looking from our bank this side, they're looking from their bank that side, and we couldn't find the money. And eventually it just miraculously appeared out of thin air. And they're like, oh, sorry, it got held up somewhere. And, but there's no visibility, no transparency of the payment. And you can see how that can lead to, breaking trust between, good parties. And imagine that was for, something that we had purchased. And they just said, okay, well, sorry, you can't have the goods anymore. We're no longer trading with you. Because the money didn't turn up. And, we sent a wire. It should have been there the same day. It should have been there within an hour.
Yeah. Yeah. It's just like bill payments. But what a great example, because it proves a really legitimate point, right? Like, it's really crazy.
I think the main point is you should never joke about money with your investors.
Probably not. But, but I always love about that, you have to do when you're paying, property taxes or you're paying bills or whatever it is. It always says, please ensure you send the payment 3 to 4 or 5 business days in advance, so make sure it reaches on time. And it always makes me giggle, right?
Yeah, it's crazy.
Like, not that we earn a lot of interest in our bank accounts, but I'm like, why would I want to pay this bill so much more earlier? Like, if, I could be earning interest, or it's an investment, whatever it is, right? But it always is that kind of caveat.
Yeah, so if we look at pretty simple things, for businesses, when you do payroll, your payroll provider takes the money out of your bank account somewhere between 7 and 10 days before anyone actually receives any money in their bank accounts. And they're sitting on the float. And that's really not required. So, imagine the global payroll is all sitting in accounts for 7 to 10 days. And those businesses are all losing out on that free cash flow, on the opportunity to invest in something else, the opportunity to purchase something, and of course in the interest. So the opportunity cost and the interest cost is enormous. And that's not required. So often you can even take a certified check into a bank and they'll say, oh, well, we'll hold this for 10 days. I mean, like, no, you won't. It's my money. It's certified. You've got to give me funds right away. And sometimes they'll fight you on that. I mean, it's absurd. We've got a broken old system that was designed in the 50s on really old computers, and we've got to modernize it. Now, look, there's been a lot of innovations in payment. And I look at companies like Stripe that have done an incredible job, but they are just lipstick on a pig. The underlying rails are still old rails. And they are not going to solve tomorrow's problem. We need to move to payments that are fast and that are cheaper and that are data rich, and we need to do it now. And we need to do it globally. And when you look at Libra, the only reason something like Libra from Facebook is even getting any attention is because all of the other systems are so bad.
And Facebook is seen as more innovative. They're always doing something different and challenging the norm. So I think people are also starting to gain that awareness of what are potential gaps. Because a lot of people have already accepted the norm. Like, it's going to take this long for this to happen. But this might be, it's helping with that awareness.
Yeah, we've got a new generation now, and this new generation is impatient. And I think they've got a right to be impatient. I think we've all been too patient and put up with too much nonsense from everyone's all of the providers. It's time to move on. It's time to innovate in the space and give better services. And frankly, if banks and central banks don't do it, there are going to be platform plays like Google, like Amazon, like Facebook, that are going to come and eat everyone's lunch.
So this is really amazing things. Like, Laurence, how did you come up with this idea to begin with? Like, was there you saw it because, you're from the telecom industry, so you always see real-time billing and real-time whatever. Like, where did it come from that you're like, oh my gosh, this is such an amazing problem we can actually truly solve?
Yeah, the first thing that I noticed is when I came to Canada, I was working at Bell Mobility. When I looked at our costs of doing business, they were so much higher than I'd experienced in other parts of the world, and a lot of that came down to all of this different friction in the ecosystem. It would just take days to get paid. It would take days to resolve problems. And that would mean that people are not using their phones or not using the internet when you want them to be using it, because you're still waiting for a payment before you can turn them back on and that sort of thing. And there was so much confusion and complexity and just doing what should be fairly simple things. And we'd end up wasting so much time and money on the phone. So the first thing we did is we looked at our overall cost of capital and the float. And, we were able to, we could take, $100 million out of that pretty easily by just fixing some simple payment things. And then I thought, well, these mobile phones are becoming so smart, and this is before the smartphone. So this is 2006. What we should do is we should enter the payments business because we already have a real-time platform that bills and rates in real time for all of our prepaid. And if you think about prepaid globally, it does that hundreds of thousands of times a second, because every time you turn on the phone, you're paying immediately just to use it. It's pay per use, right? So we already had those systems. And when I compared the robustness of our platforms in telecom with the robustness of things in finance, it's just chalk and cheese. So, some of the engineers that work here at nanopay wrote E911. And do you know how many times E911 has gone down? Never. It's never, ever gone down, not for 1 second. And there is no planned downtime. It won't go down. It has to be on all the time because people's lives are at risk. And, when you look at our telecom network, I haven't had a drop call on Bell Mobility for over 10 years now. 10 years, no drop calls. I mean, that is real resilience. That's a network that works. Yeah. But my credit card doesn't work every second time. Every time I turn up to a machine, I start sweating. I'm like, is it going to work? Are they going to think it's me?
Do I have to?
No. Yeah. I am really a good guy. I have another card. I'll try that one.
Yeah. All of a sudden you're like, okay, try this one. You're holding up a line. It's quite a little hashtag awkward there.
Yeah. And then what's the first thing that happens when you travel? You travel abroad, you turn on your phone and it just works. It's super easy. Then you try and do something banking related and they shut everything down because they think, this is in a foreign country. So obviously someone's trying to hack the payment system. So, no, your card's blocked and you can't send a wire and the irony is then you have to call in the middle of the night to speak to someone at a bank to restart all your accounts.
Yeah.
It's crazy. I mean, it is crazy.
But it makes me laugh too because I'm also from the telecom industry too, so I totally get what you're saying. And it always made me laugh because I'd be traveling somewhere in a foreign country, and then my credit card company would call me to tell me about a weird transaction that happened 12 days ago. And my first thing is always like, why didn't you flag it 12 days ago, right? Like, you're calling me, like, I don't understand. Like, it's so funny. But, yeah. But it proves that point, right? Like, where is that kind of real-time, like, catch?
Absolutely. There's so much opportunity to fix the system. And I do believe telecom has a big role in that. Telecom companies know a lot about you. They know where you are. They know all your habits. They know who you're connected to, who you speak to. And all of that can go a long way to reducing the risk in AML and on the KYC side, and to the entire ecosystem. The second thing is they have an ecosystem that is inherently secure. You can't just phone if you don't have money, or if you don't have credit. Effectively, every telco runs a credit system for postpaid and a prepaid credit system for everyone else. That is far superior to any of the cards infrastructure we have anywhere in the world, and it just works. It's secure and it just works. We don't have to put in fancy pins and two-factor authentication and all kinds of stuff. Most phones, you just look at them or stick your thumb on it now. Mm-hmm. The biometrics are built into the device. And we're running around using these cards that were designed based on a paper-based platform that are 50 years old on even older infrastructure. It's crazy.
No,
so we want to fix the underlying rails. That's what we want to do. We want to fix the underlying rails to say that payments for consumers should always be free. We should massively reduce the retail and online cost of payments. Business-to-business payments have to be data rich, and that way we can really transform these payments. We can take $30 billion of cost out of infrastructure and out of friction in the ecosystem in Canada alone. And by the way, we have the trademark the frictionless, which is quite interesting because they used it about 50 times on CNBC yesterday when they're talking about Libra. So I'm going to have to give them a call and tell them that we have the trademark for frictionless.
Oh, that's hilarious. Now, I can use the word frictionless in our podcast, showcase notes, right?
Absolutely.
Just want to make sure for on the air, I have it on record. I'm allowed to use it.
There you go.
Oh, I love it. And, I think also, so I back in 2007 and 2008, I actually was doing a lot of work in South Africa. And when I was out there, I was doing some stuff for a bank. And again, it was telecom and a bank, and it was really interesting. But I always found it really fascinating about how ahead people were in South Africa in terms of mobile payments. That people were out in the field and they were transferring money via these old phones to get it home to the families. And I found it so interesting that the rest of the world hadn't actually started talking about mobile payments like that, whereas in South Africa, they actually were doing it for quite so many years and before it actually took off and it got regulated and so on. And I'm wondering if that kind of, inspiration kind of also comes, comes to you when you were actually coming up with this whole idea about nanopay?
Yeah, I come from South Africa, so I've seen how far ahead South Africa and Sub-Saharan Africa in general is in many areas. And we don't have the same guardrails, but we also don't have a nanny state that stifles innovation. So I think here we've been too caught up with who's regulated and who isn't. And I think the key thing is that we need regulation to protect consumers and businesses in payments, but you shouldn't have to be a bank to be regulated. And at the moment, you cannot be regulated. And if you're a small business or a fintech or a company with a great technology or fantastic ideas, you can't get ahead because you don't get that rubber stamp saying that you are safe and secure. Every single consumer and business out there assumes that anyone that's doing something innovative is probably doing something nefarious if it's in crypto. But I'm sure there's some good actors out there. But it's impossible for them to get a rubber stamp or a good business approval that every bank has just by definition in their name because they're regulated by a regulator that's going to keep them honest. So I think the answer is we need regulation.
And it's funny because, you hear it on the radio about people being scammed constantly too, right? So a new company will come in with an amazing idea, amazing whatever, and there's no kind of insurance or security that's sitting behind all of it because people don't even know from a general perspective of what it is that they need to be looking for to make sure that the money is protected. If something goes wrong, is it insured? And they don't know what to look for. So
yeah,
I think
absolutely. Yeah, absolutely. And, I think if we had the whole industry regulated, not just the banks, that might push up the barrier a little bit and add some costs to the industry in general. But at a macro level, it would be better for the whole industry. And I'm not saying regulate a small 5-person startup with an innovative idea the same way you regulate a large bank, but everyone should be regulated. And the regulation should be in proportion to the risk. And you should be accountable and responsible if you lose someone's money.
Yeah, I totally agree. Because it's really interesting because every time I kept hearing on, AM68 or something else that, so-and-so was, talking about money and blah, 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 and they invested and then they lost all their cash. And I was thinking in my head, I'm like, did they not check to see that it was CDIC kind of insured, or do people not know that they need to look for these type of banners about security pieces? And I think there's also a bit of an education and awareness that people need to really, and companies need to actually spend the time to remind consumers of that, because I think a lot of that stuff has become lost as well.
Yeah, I mean, would you buy a car seat for an infant that didn't have a stamp of approval saying that it was safe?
No, absolutely not. Just like I wouldn't go to a restaurant that doesn't have the green pass that tells me it's passed by the food inspector and the health and safety.
There you go. And so you shouldn't invest in something that you don't understand and doesn't have some rubber stamp from someone saying that it is safe.
Yeah, but you know what it is? I think it's also back to the whole point about, the new generation is impatient, that we always want new, shiny and new. But sometimes old and stuff, there are some good stuff that are old and goldy that really do work, and that baseline is something that you need to kind of continue to have.
And so that's why I think the big opportunity is for banks and central banks to embrace innovation, work with fintechs rather than against them, stop pretending that they're going to eat their lunch and say, we cannot innovate because we're old and big and clumsy. These guys can innovate, so we're going to work with them to together create something that's safe and innovative. And I think that's the best way forward.
That's so exciting. So exciting. So what excites you most about this industry?
Well, the most exciting thing is the amount of change that's going on. So in Canada in particular, the Bank of Canada has really stepped up and become a lot more innovative, and they are looking to open up access. The Payments Canada has been working on modernization. We've made tremendous progress on the large value system, which is going to be called Links. Less progress on the Realtime rail, but there's a strong focus on that. and we really need to drive the innovation forward there. And Finance Canada has been really working on all of their policies to enable both Bank of Canada and Payments Canada to initiate these changes, to drive the innovation, to allow banks to partner, to allow more investment in this space. And then we look at some of the others, in particular the OSC, the Ontario Securities Commission. They've been pretty innovative with their sandbox, allowing companies to try new ideas. And so I'm pretty excited about all of the change that's happening, both in Canada and globally. I've got to be really honest with you. We are miles behind in Canada. We are miles behind, and we've got a lot of catching up to do. And if we don't catch up and quickly, then the consequences will be someone else will come in from the outside and provide all of our payments ecosystem. And, there could be a world where something like Libra is so successful that the Canadian dollar becomes irrelevant.
Oh, that's scary.
Absolutely. So it's time to innovate. Time for central banks and ecosystems to collaborate, work together, innovate. There'll be no need for something like Libra if everyone else in the ecosystem innovates and quickly.
That's amazing. So yeah, that's great. So that's neat to hear that the Bank of Canada, Payments Canada, Finance Canada, Ontario Securities, like they're all open to innovation. But the question is, can we innovate fast enough? And it's great that's kind of being done in a partnership as opposed to in silos. So you can really move forward together. So that's quite exciting.
It is. It's very exciting. And, at Paytechs of Canada, we've been working really hard on trying to drive this agenda of open banking, payment initiation, as well as access to the real-time rail. And I think access is really, really important. And I just want to be very clear that when you provide access to a non-bank to the real-time rail, you do not add any systemic risk, because everything in the real-time rail will be effectively prepaid. So there's no risk from any of the participants. You have to have the money secured in a central bank or in a participating bank's account prior to initiating any payment. So by opening up the access to new participants who are currently not allowed to, because access is restricted to the members who are only financial institutions, we do not add risk. What we do is we add innovation, and we push the agenda, and we force the financial institutions to innovate. Otherwise, they're going to lose some of their clients.
So for our listeners out there, what exactly does the real-time rail refer to?
So
RTR.
real-time rail, real-time rail is a future small value. And when I say small value, it'll be, I think eventually it'll go up to hundreds of thousands. In the UK, they're £250,000 at the moment. Real-time rail, where you can move money in real time from one business to another business, to a consumer to another consumer. In theory, you could pay for a house in it. Right now, all of those payments have to get paid through a wire system, which effectively goes through LVTS. So once you open that up and you allow companies to participate directly in that, and payment and non-financial institutions payments infrastructure to participate in that, you open up the innovation, the speed. You'll get much better services, and you'll have real competition for how we do these things. I think the key thing in a real-time rail is that you're going to do real-time gross settlement. And in real-time gross settlement, it means you literally are moving the money immediately. So there's no risk. There's no credit risk in the ecosystem. When you do, say, a credit card transaction, it just adds risk to the ecosystem, because that creates a credit relationship with the person using the card and their financial institution, the card issuer. A credit relationship between the card issuer and the merchant acquirer, and a credit relationship between the merchant acquirer and the merchant. And sometimes it takes days to unravel that, and even up to 6 months later for a card not present transaction, those funds can be recalled. So there's so much cost in that risk that we need to eliminate all of that. The key thing in a real-time rail is we will have a credit push system, where if you don't have the money, you will not be able to initiate the payment. And therefore the receiver, once they've received it, know that it's good funds and the transaction is done.
Oh, that's amazing. That is amazing. It's so fascinating. It's so many neat little terminologies and, especially in this banking space that people don't realize that are behind in the engine. So it's really cool to hear that. And then you also mentioned about open banking. So this open banking concept, do you think you could talk a little bit about that or what it means and how it will be a kind of a game changer?
Yeah, so open banking for me is focused really on who owns their data. So we argue about who owns the data that I give to Facebook, but we should also be arguing about the data that I give to a bank and the data that I give to a telco. So, for example, if I choose to move banks, I should be able to take all of my data with me. So all of my historic transactions, I should be able to take them. Just like I can do wireless number portability with my telco, and I can keep my number and go from one to the other. I should actually be able to keep my account number that I've already got in place and move it to another bank. I should be able to take all my historic data. But even when I stay at my bank, I should be able to give that data to anyone else I choose. So let's say I want to give all of my banking data to my accountant to assess my taxes. I should be able to push a button and release all of my data to my accountant. Let's say I've got a firm that's going to come to me and says, I'm going to find the best deal for you to buy milk. I should be able to release my data so they can find the best place for me to buy milk. Absolutely every aspect of our life, we should control and own our own data and decide where it goes. So the first thing about open banking is that consumers and businesses should own the data that is held by banks. And if they choose to share it with a third party, the banks should release it immediately. And that should be readily available through an API. So the format is I log in and I say I'm going to give X access to my account, and then they have the access that I provide them. And that's not available today. So simple things like trying to reconcile my bank statement with my books today are done by screen scraping. And screen scraping is the only choice we have today, but a poor second best to API access to the bank account. So what it actually does is it logs on as if a machine logs on as if it was you, and it looks at the screen and it reads everything on the screen and it translates that into accounts, and then it compares it with what's in your accounts. That's a poor alternative to giving direct access to my accounting software that can make sure that that's all reconciled.
Oh, it's such exciting times, So do you get a chance to ever kind of relax or take some time, or because you're really in the thrust of it all?
Yeah, so I'm not the sort of person that needs to spend a bunch of time with my feet up. I do read a lot, and I exercise fanatic, so I do lots of that. And, I have a family, I have a wife and 3 amazing kids. So, yes, I absolutely do get time off. And I love to read. I like podcasts. So, yeah, I do lots of things.
Oh, that's fantastic. And if people wanted to embrace their curiosity, like you've stimulated some now, moments of like, oh, I want to know more about what's happening in the banking world and payments world and all of that. Do you have some tips or resources that they can kind of embrace their curiosity?
Yeah, I think there are a couple of resources that I go to all the time. Firstly, Payments Canada has got a really good website that's got a lot of information on it. Secondly, the FinTech Growth Syndicate has an amazing site with a huge amount of data in it, and they've done a wonderful piece of work analyzing both the Paytechs and the FinTech industry. So that's another really, really good resource. And then Paytechs of Canada. We've set up Paytechs specifically to be able to communicate and share all of this information. We have our first event, which will be with the Bank of Canada and with Finance Canada here at our offices at nanopay in a couple of weeks. So that's super exciting. So yeah, those are my 3 go-to places.
Amazing. And finally, how can people connect with you?
Yeah, that's easy. They can email me, Laurence@nanopay.net, or they can phone me on our number 416-900-1111. I'm not so good on the phone. I'm much better at text and Slack. But once you get hold of me, then I'm easy to communicate with.
Excellent. And for our listeners out there, don't worry, we're going to make sure it's all in the show notes so you don't have to look for anything. So This has been brilliant, Laurence. Really, I really enjoyed this. I mean, the amount of value and aha moments, I was like, wow, this is really great.
Well, thank you. It's a great conversation and lots of exciting times ahead.
Definitely. Thank you so much for joining and listening to the podcast. If you enjoyed this episode or any other episode, please share with your friends and colleagues. You can share on social media, the email link, the newsletter, and so on. Let's continue to support these Canadian innovators and help them really grow into bigger brands. Awareness and knowledge is totally key. Anyways, I can't wait to talk to you next week. Cheers.